Okay, Gené Teare or Gené, are you here?
Yes.
Is it your turn?
Yes, it is.
All right. Okay, you're going to talk about the
I'm
great
moving to
relocation,
chairs.
correct?
I am.
The great reallocation, venture
Reallocation and venture capital.
venture capital funding in an age of AI. All right, take it away.
Hi, everyone. It's great to be here. I'm going to look at the venture markets. I'm at Crunchbase. I'm the research lead and on the news team. So I spend a lot of my time diving into Crunchbase data to understand where funding's going, and then also talking to founders, venture analysts to try and understand what they're seeing in the market and see if that matches with our data or whether things are changing. You can go to the next slide. So this is me. We're going to go over some slides on the global funding market. We're going to look at the unicorn board and the surge evaluation that we've seen in the last year and a half. And then finally, the exit markets and the SaaS apocalypse, which has been more of the story of this year. Next slide. So this is the venture market. And I think what's interesting, it goes from 2011 all the way through to Q1 2026. And you can see as an asset class, venture has expanded over the last 15 years quite dramatically. It hasn't necessarily grown every single year, but as you see it over time, it has become a bigger asset class. This is global. So that expansion also includes expanding bigger into Asia, specifically in China, into Europe. And then you'll see in 2021, something very dramatic happened where funding in a single year doubled overnight. And what we saw is a lot of funding going into those very, very large rounds. We saw a massive clip on the unicorn board. We saw a huge number of exits. So an unprecedented amount of capital went in 1 year. And that was due to COVID and everyone seeing everything's going to be digitized. All of these services are going to grow much, much more rapidly. And therefore, that justifies us putting our money in. When the market corrected at the end of 2021, and you'll see later on, I look at some of the liquidity slides, the public markets completely stopped for venture, but venture always takes a little time to adjust. And so Q1 was still incredibly strong. And from Q2 onwards, funding came down. So in 2023 and 2024, global venture was around 300 billion. It had pulled back quite significantly. But interestingly enough, I think if it hadn't been for the AI wave, ChatGPT launched at the end of November 2022. If it hadn't been for that wave, I think venture would have pulled back even more by almost 30 or 40%. I think that's quite elevated because of this new AI wave. And then I think what we're seeing is in 2025, venture picked up again. And Q1 2026, it's the largest quarter we've ever seen in venture. Over 300 billion went into global venture. Much more of that money is coming into the US. And you can see already almost half of what we saw in 2021. If you can go to the next slide. This is what it looks like from an AI perspective. And in Crunchbase, what we do is we tag every single layer of the stack that is impacted by AI driven. So this includes the model companies, the semiconductor companies, the data centers, which are AI driven, the data provisioning and orchestration of data, as well as the AI native applications at the top, as well as companies where AI is central, even if they're not AI native. They didn't start in this era. If AI is central to what they're delivering, then they're tagged as AI. And I think, again, it's interesting. GPT was in 2022. And you can see venture takes a while to grow. And so it grows in 2023. It takes all the way through to 2025 for the amount of funding to go into AI to be around 50%. And then obviously in Q1, because of the very large rounds raised by OpenAI and Anthropic, that is off to the races. And I think, as a technology, this is very different. When we've looked at any single sector in previous years, the biggest sectors that we saw prior to AI was healthcare and financial services. And that would sort of reach at the most around 20% of the total venture ecosystem. So 50% tells you that AI is a very, very different technology where it's kind of weaving through everything. And so we see those trends obviously is going to accelerate. When you talk to investors and they say what they're investing in, they will say 80 to 90% of their new deal flow is due to AI. Any company that is seeking to go public that is tech oriented, AI has to be a big part of the story. If you go to the next slide. This is looking at the foundation model companies and what they've raised as a proportion of AI. And again, because some of the largest rounds have gone into these companies in 2023 and 2024, I always expected these numbers would be much larger. In fact, the larger amount of funding going into AI has been, we separate sort of the infrastructure and the application side, it's been roughly equal, but you'll see the model companies have escalated bigger every year, bigger in 2025, and then again in 2026 off to the races. Next slide, you'll see, this is what OpenAI and Anthropic have raised. And actually, oh, I almost fell off. And Q1 2026, Anthropic raised 30 billion. They've already raised another 15 billion and are said to be raising another 30 billion within months. So I think these numbers are just going to travel up to the two model companies at the top. Next slide. Two trends that we are noticing in our data is obviously the concentration of capital into these much larger rounds. And if you look at venture since 2014 all the way to Q1, you can see the propensity of funding to go larger dollars to go into these very, very large rounds has grown, and it's unprecedented. So 2025 was around a third, and then Q1 2026, 71% of dollars went into funding 500 million and up. Next slide. The other trend that we've seen in venture is that this is looking at the US market, and the US market has been the largest venture capital market. Obviously, Silicon Valley is at the heart of that. And if you go back to 2010 to 2014, the US market was way above 50% as a proportion of global venture. That shifts from 2015 all the way through to 2023, largely because of the growth of Asia and the funding market in Asia, and also the growth that we're seeing in Europe. That changes with AI. A lot more of the funding is coming back to the US. The US has become much more dominant once again. And I must say, I was surprised by this trend. I see this technology, it's an API away, it's very equalizing. There are these ecosystems right around the globe. You would expect that venture to travel out more rather than come back to Silicon Valley. So I think it's going to be interesting to see, is this going to be a moment where it's everything comes back to Silicon Valley because of the open AIs and because of the US market, and then it starts traveling out again, or whether that trend is sustained over a longer period. Next slide. And this is just looking at the Bay Area. Obviously, everything has gone to the Bay Area. The second largest market in the US is New York, and actually New York has held up. The Bay Area has grown over the last 2 years, but New York has held its place, and I think that's because so many founders around the world want to come to the US to gain access to the US market, and they're choosing between the Bay Area. New York is obviously closer to Europe and closer to other parts of the world, so New York is the second largest hub. And then the other two larger hubs, which have lost a little bit of share, is Boston and Los Angeles are the two other hubs. They've lost about 1 percentage points we see as a proportion in this new AI era, although still very strong. Next slide. So this is some of the coverage that we do in Crunchbase. It's just looking at the fact that Q1 is the largest quarter ever in venture, and we're trying to understand what that means for the venture industry, because we're only 3 years into this AI wave. We know this is going to carry on for the next decade or two. Next slide. I think what's also interesting is, in these boom years, we see a lot more money go to the top. But I think what's been interesting for me is that we've also seen at the earliest funding stages at seed and Series A, the median still increase. And so what you're seeing here is the median is the green line. You'll see the upper quartile is at the top, and the blue line at the bottom is the lowest quartile. And you'll see at every single of these single pieces of this pie, funding has gone up. And what's interesting to me is that in 2021, when everyone was piling in, I would speak to seed or early stage investors, and they would say, we're investing at a faster clip, we're investing our fund much more quickly, we're investing at higher valuations or larger rounds. And the reason being that if we invest now in 6 to 9 months, this is getting valued up. And if we don't and we hold back, it gets valued up and we miss the train. And so everyone kind of just piled in. And so there was a lot happening at the larger stage, 100 million plus, but at every single stage of the pie, we saw funding go up. And so you'll see the biggest uptick, the biggest uptick between 20 and 2021. 2022, as I say, the venture markets always take a little bit of time to react. It was still going up, it pulled back, and then it's off to the races again. And now when I speak to, you can go to the next slide, which shows Series A. And now when I speak to people in the venture market investing at these earlier stages, they're saying they're having to change their fund strategy because round sizes keep going up, and seed millions that used to be 2 million a couple of years ago are now 4 million out the gate. So this is exactly the same trend at Series A at the different quartiles. You'll see the biggest lift in 2021. It's up, elevated in 2022, comes down, and now it's picking up once again. Next slide. So we're going to look, and you can go to the next slide, just the unicorn valuation surge. So we run a unicorn board, which is every single private company across the globe that's been valued at $1 billion or over in its lifetime. Any company that exits the board goes onto our exited unicorn board. So this is only the still private companies and the companies that have exited on the exited board. So today there are north of 100 and 750 private companies that are valued above $1 billion. They've raised collectively around 1.43 trillion. And they're currently valued at around 9 trillion. I think what's interesting about this is if you look at the end of 2024, you'll see it's a couple of more hundred companies, so not a huge escalation in terms of the number of companies. There is somewhat of a surge in terms of the amount these companies have raised. We know these companies are raising much more in the last 2 years. But if you look at the valuation, there's been a huge uptick between 5.4 trillion at the end of 2024, and just in a year and a half, the board is now valued at 9 trillion. Obviously, Cerebras, which just went public, is no longer on the board and in these numbers. If you go to the next slide. This is looking at the new unicorns by year in terms of the account at the end of each year, excluding those that have exited. And you'll see here, again, this huge sort of uptick in value between the end of 2024 and the end of 2025. And then that's accelerated even more between the end of 2025 and May 2026. And so what's interesting in watching these values, and you can go to the next slide, is how the unicorn board keeps growing because of the very slow liquidity that we've seen in the private markets for public companies. Next slide. This is new unicorns by year. And again, the trends are similar, where you'll see in 2021, a massive uptick, an unprecedented number. We felt on the reporting side, like we were reporting on 3 new unicorns. It almost wasn't big, it wasn't news if there were 3 new unicorns almost every day. If you go forward to 2025, you can see, just as in the global venture numbers, the kind of numbers of new unicorns are beginning to pick up again. And actually this year, it's already through May, it's around 149. So we're definitely feeling on the reporting side, these numbers are just beginning to build up again. What's interesting about covering unicorns and tracking unicorns, and you can go to the next slide, I write about unicorns a lot, is in the 2021 period, it was very software driven. You saw a robotics presentation earlier on today. Now, when I look at the unicorn board, there's a lot in robotics, there's a lot in AI infrastructure, there's a lot in data centers, there's a lot in software as well, but it feels much more varied. And recently, over the last, I think, 2 months, we've seen a massive uptick in even neo labs, people who want to come and compete with the Anthropics and OpenAIs in this world with their own foundation models. 2 were just launched in Europe. So a lot more of a spread in terms of the types of companies that are joining the unicorn board than we saw in a previous era. These are the most valued, highly valued, that were valued since 2024, and you can see SpaceX is at the top. And I think has said it's going to list within the next month. You can go to the next slide. Next slide. Those are the early ones. And again, this is some of our reporting on the current unicorn board. Next slide. So I think this is the problem that the funding climate in 2021 created. And so what you have is, this is the companies based on the year that they joined the board and whether they've since exited by going IPO, M&A, or having since been closed. And what you can see is there are those 1,700 companies. We think about 60% of those companies are sitting on the board. People have called them zombie unicorns, but really these are companies which would not be valued as unicorns today, don't really have a clear path to exit, I'm sure would be very interested in M&A, but they might have missed the boat because we're in a very, very different technology phase, and they might not be the most attractive companies to acquire in this market. It's going to be some of these newer native AI companies that are smaller and have the sort of future ahead of them. And you can see companies keep joining in each year, and so the board expands. Next slide. The SaaS apocalypse. So we're getting towards the end. You can go to the next slide. So this is looking at, I actually did have a slide of the largest 2025 IPOs, which included Climb, China, and CoreWeave. And what was interesting about that is that CoreWeave was the one company that went public in 2025, whose valuation is above where they went as when they first listed as a public company. Every one of those other companies, even though they were pretty big brand names in tech, are down from where they were off. This is looking at the exit market. This is US venture-backed companies that went public. And you can see in 2021, everything was up and to the right. There was an unprecedented number of private companies that went public in that year. And you can also see it wasn't only IPOs, but it was also SPACs. A lot of those companies today are not in good shape. You know, some have delisted, some are not doing very, very well on the public market side as of the sort of resetting at the end of 2021. You can see in 2022, there's still some SPAC activity, but largely the public markets completely collapsed. No companies, venture-backed companies, went public in 2022 very, very quickly. And I think the reason why the venture markets took a little while to react is when there was this reset at the end of 2022, the question was, is this going to be more sustained, or is this just going to be a blip and we're off to the races again? And when it was clear that this was going to be more sustained, that's when you saw venture pulling back. So you can see it's been very slow for billion-dollar exits in the US in 24 and 2025. I mean, 2025, 23 and 24. 2025, it started picking up again. We saw 24 companies that went public that listed as at $1 billion. And when I speak to analysts, they say they're looking for numbers that are reminiscent of what happened in 2018, 2019, and 2020. So you can see in 2025 with 24 of these larger IPOs, that's in line. I think the other interesting number is this 2025, was the largest year for M&A that we've ever seen for venture-backed companies. So a larger number than previous years, but also not larger number in terms of valuations. For this year, it's slower again because of the SaaS apocalypse. So a lot of companies canceled their listings. The most recent data, which I just pulled through May, shows there's about 12 M&A above $1 billion and 12 IPOs above $1 billion. So we have seen a pickup since the end of Q1 2021. And obviously with Cerberus going out, those numbers are much more elevated. If you go to the next slide. So this is showing those same numbers by the valuation, either the price that a company sells at or the valuation at listing. So not the first day pop, but when a company first goes out at its value. The Q1 numbers have shifted again a little bit. They're almost, the purple line is above what we saw in 2018 at 95 billion due to some of the recent listings that we saw in April with Cerberus among them. But you can see again in 2025, in terms of the prices, we're above 2018, but still below 2019 and 2020 for public IPO listings. On the M&A side, it's the strongest year we've ever seen in M&A for venture-backed companies. Next slide. Here are some of the coverage just on what we predict at the end of the year around companies going public. Next slide. So what's next? So I think we're in for a pretty exciting time on the venture markets. As I mentioned, there is funding going into not just the software layer, but every single layer of the stack. There's a huge amount of conversation around CapEx and the amount of funding that needs to go into the capital infrastructure to rebuild it for AI. And so I think we're very early in this new cycle for venture investment. We've seen things begin to pick up in 2025. Pick up even more in 2026. And so I think on the private venture market side, there will be stops and starts because of the huge values that are being invested into these companies. But I predict that we're going to have a very strong 2026 and into the next few years. What we are seeing is a massive shift in where value creation is. A lot of it is accruing to the top of the most highly valued private companies. But when I look across the stack at the seed companies, the Series A and B companies in the late stage, there isn't a pullback in funding at any of those stages, even though we see more going into those companies at the top. When you compare 2025 to 2024, there are more companies getting funded, larger rounds into these companies at almost every stage. And so the market looks not only elevated at the top or the surge at the top, but that there's a lot of activity at every stage. When you talk to venture investors, they're saying now's the time to invest for the next wave. And so they're all doubling down. They are, I think they're investing with more conviction. I think in 2021, everyone just seemed to invest in everything that came across their plate. I think now people realize it's much harder, it's much more competitive for you to make it through and compete with the incumbent companies who are going to be competing in AI and the new native AI companies, that it's going to create a lot more. And therefore, when you are investing, you're putting more to work, but you're investing with more conviction. So a massive shift and a huge amount. We saw a robotics presentation earlier. We've seen a huge amount of funding going into robotics. When I talk to investors about that, they would say things like, we're not quite seeing the unlock in value yet. We don't know if it's not proven yet, but nonetheless, a huge amount of money is going to that physical AI sector. And again, the unsettled markets, I think that's here to stay. What we're seeing today is the infrastructure plays, the data center plays, those are doing incredibly well right now because of the demand. Everything on the software layer has to show massive acceleration in revenue. If your revenue is not accelerating, I think you're in trouble on the software side. If your revenue is strong, if your growth is strong, I think there's huge opportunity. And so it's very much a bifurcated market on the public market side. And that's it. If you can go to the next slide, you should be able to get these slides. I can also ask the organizers. Sometimes it's a bit funky with the Wi-Fi for us to get this. So I don't know if there's any questions. Yeah.
I'm sorry, can you hear me now? Yes, quickly. We're developing 7,000 megawatts of geothermal power for data centers, California, Nevada, Texas. How many of those companies are clients potentially to buy geothermal baseload power rights and checked and get it done quickly, in your opinion?
I think there's huge demand. I'm not sure. I mean, you might know better the supply chain and who to go to for that, but there's huge demand. I assume you're saying you're in the energy sector?
Yes, ma'am.
Powering data centers?
Geothermal power.
Yeah. I think there's huge demand.
Thank you very much. I'll talk to you after this.
Okay. How many people here are in Silicon Valley, just out of interest? And are you feeling this in the environments that you're in? Yes.
Have you heard of AI? So everyone's talking about AI. So clearly AI is bottlenecked at like infrastructure. You kind of mentioned it, data center build out. Do you see hesitancy in money going into it, or what are the bottlenecks you see in that? And even in regulation, slowing down data center build out and how it impacts the rest of the AI ecosystem.
Yeah. I mean, I don't know if any of you have watched or heard of Anthropic's recent revenue growth, that at the end of last year, it was around 9 billion. And now they're saying at the end of Q1, the ARR growth was 30 billion. They went and just did a deal with SpaceX to buy all of their surplus compute. I have friends who I interviewed an investor recently who's invested a lot in the AI infrastructure space, and he's very, very worried about the overspending and the market drawing back and his investments going to dust because they're very reliant on the demand. But what I'm seeing in the market is the demand seems excessive and that there's no shortage of need. And if anyone has access, they can sell on to other players. So I think right now where the industry is, there doesn't seem to be enough demand.
Yeah, that's what I get. But is the build out moving faster relative to that demand? Are there creative ways by which the build out is happening? I mean, I'm at the AI application layer. It really matters for my startup, and then that leads to where value is accrued,
Yeah.
in the investment cycle.
Yeah.
How fast the investment cycle is moving.
What I'm hearing is that the build out is constrained. That it is energy that is the most constrained. Where we're that's where the biggest underlock is on the energy side. There are a lot of these new energy nuclear reactors which are being invested in, but they're still 5 to 10 years out. So I think I don't know if I'm answering your question, but it seems to me there's a lot of constraints, which is going to lead to some ingenuity in terms of how we make this cheaper and easier to deliver.
But yeah, constraints will be for another 5 to 7 years, you're saying?
Yeah.
Interesting. Thanks.
Okay, well, I think we can end there. Thank you. And yeah, great to meet you all.